Let's get a move on then and connect then with Namita Thapar, whole-time director, Emcure Pharmaceuticals, as well as Satish Mehta, the CEO, now joining in. Thank you so much for taking time out. Congratulations to the both of you. I'm sure today is a momentous day with a listing and a stellar one at that. So just let's start off by putting into perspective a little bit more about Emcure Pharma. What are the kind of growth targets that you've set out for FY25? Either of you can answer.
Oh, I will take that question. Thank you very much, for inviting for this particular interaction. And as far as we are concerned, we are very bullish about the growth. And in the current year, I suspect the industry will grow by 9 or 10%. And as far as we are concerned, we would like to have growth, higher than the industry. So that's the guidance or indication that I would like to give as far as the management perspective is concerned.
Okay, fair enough. What about, Namita, the therapeutic areas that you understand for the company as of now that are performing well, that have the potential to grow even more?
So the domestic business makes up about 48% of our sales, and in that business, we're in 19 therapeutic areas. We're a leader in Gynac with 13.5% market share, and by far a very significant lead even over the second player. With the Sanofi in-licensing deal, we have a very strong cardio presence. We're also present in all the progressive and growth therapies, be it anti-infectives, gastro, oncology, diabetic, CNS. So Emcure has a strong presence. We're known to build big brands, and we will definitely double down on that.
Interesting. So Namita, where exactly, when it comes to your product portfolio, brand portfolio, do you see significant margin expansion, say, in the next 1 to 2 years?
So in the last 1 year, we've added about 1,000 reps. By the time they really get to the optimum productivity, with that, as well as some of the capex in the company reaching the optimum utilization level, we definitely will see improvement.
Right. Satish, what is the sustainable rate of growth for both your revenue as well as PAT? Because already ahead of your listing, the street was doing, calculations, and we're anticipating about almost 800 to 900 crore rupees purely on the bottom line itself in the next 2 years. Do you think that's a believable rate?
I think we will all work in that direction. As Namita was saying some time back, there are three initiatives that the company had taken, which are absolutely growth-driven initiative had to be taken. One, adding 1,000 medical representatives, that is pulling down obviously, your margins by some percentage, because it takes some time, to reach the optimum productivity. And this is because, we want to focus on reach and penetration and want to go to tier 2, tier 3 cities. In my opinion, that's the right strategy. The second thing, that we have done in last, couple of years, we have invested significantly in capex. We have created 4 new additional facilities. In addition to 9 facilities we already have, we have 13 manufacturing facilities right now. And the third thing, in the last year, we acquired a company in Quebec, part of Canada. So this acquisition has also played out. So going forward, with this growth capital coming in the system, out of 800 crores so that we are raising, by the way, primary 600 crore will go for reducing the debt. And in addition to that, once the capacities get ramped up, once the productivity is on track, in that case, the margins are bound to improve going forward.
That you're setting out some strong margin outlook. You had also commissioned some new plants. How are they expected to actually help financially? How will that help improve the operating leverage?
Basically, as I've been telling all along, that we are a company which is driven by research, science and technology. So new products, is something, which is gene of the company. So whenever we get new products, obviously we would like to have capacities, for getting these products, rolled out in the marketplace. So that is something which will happen. In addition to that, we keep on filing number of formulations, for the Canadian and European markets, so require capacities. And obviously, as far as the domestic market is concerned, as Namita said some time back, the focus is on the big brands, becoming bigger. So volumes will also grow up. So obviously, we require capacities that should get ramped up, in near future. So I'm very bullish about the capacities getting utilized in very near future, and that should also add to the margins.
Okay, and finally then, Namita, there was the acquisition as well of Mantra Pharma. How is that working out? How will that contribute to your top line growth, and how could it potentially help leverage in the future?
So it's going really well. There are obviously a lot of synergies, opportunities for vertical integration. But on the numbers, I'll let the CEO chip in a bit more. He looks at it more operationally.
As far as we are concerned, we are already in Canada. We have a subsidiary by the name Marcan. And as far as Canada is concerned, Quebec is very different. It's a French-speaking area, so it behaves differently than the rest of the Canada. So this acquisition we did in the month of October. And in the current financial year, I think it should add, at least 450 to 500 CR, to the top line and very healthy bottom line. And it is a very synergistic acquisition in the Canadian market. Because till now what has been happening, we have been reasonably strong in the rest of Canada. With Mantra being part of us, we should do very well in Quebec. And going forward, I do expect the company will have significant presence in Canada.
All right, appreciate you both taking the time out. Thank you so much, Mr. Mehta, as well as Namita, for joining in and giving us a view, and all the very best for the road ahead for Emcure Pharma.
If you like this video, then like, share and subscribe to ET Now.